Good morning, traders. Welcome to the weekly wrap and week ahead preview from PrivateerFX. Hope everyone had a nice weekend. Mine was extremely busy. My Wisconsin Badgers beat up on the Michigan Wolverines this weekend. That'll make some of us here at PrivateerFX happy and some not too happy. Let's take a look here. Let's get right to the charts. There's some interesting price action last week. Here's the dollar yen chart. Take a look at this daily bar. This big red bar. High was 113.14. It got down to 111.95. This is definitely, if you look just in this time period here, back to June, it's one of the bigger down days that we've seen in a while. And dollar yen has been trading, very strongly since September, since we got the dollar index put in its low and started rallying back up to the 94 handle. And dollar yen was very strong. We had that head and shoulders pattern neckline break, and we are seeing the fall through now. Our first support, we just missed it on Friday. 111.90, 90.91 is the third fib coming back down from this big swing, this whole rally. There's a confluence of nice support down here with the 100-day and the 200-day in the low 70s, and then you've got this old daily low here at 65, 111.65, 66. So we're expecting, if we're gonna see more dollar weakness overall, dollar yen has a lot of room. The positioning is still extreme. I read over the weekend that dollar yen long positions are the highest in years. Same thing with dollar Swiss longs and Kiwi shorts are a very popular position these days. If you take a look here at the next support under this 111.90 area and then these moving averages, we got all the way down here. 111.03 is the half fib. I think that we can get down here and then probably bounce. So this would be half the half retracement from this whole up move. Chart definitely is looking bearish, and if we take a look at let's take a look at the weekly here in dollar yen as well. We got right down to this 200 week is 111.98, so we're trading just above that now on the Asian Open. So I would definitely keep an eye on dollar yen. This seems to be leading. You could pop over, take a look at the dollar Swiss chart as well. This is a currency that tends to tell the truth, and I like keeping an eye on this for overall dollar direction of the dollar. We got down to 98.40. We've got these daily low or weekly low here. Let's take a look at the daily. This area right in here, there are old highs here, 98.35 to kind of 98.50. This 45, this low here, and it did have a pretty nice down day on Friday. Wouldn't be at all surprised to see it test low 98s, get down to the 200-day, maybe even all the way down here to the 97 handle, and that would be somewhere around the 50% retracement as well of this big up move in dollar Swiss. Let's take a look at some of the. Here you can see this is our daily close chart that we like to look at. Dollar yen made a new low daily close since October. The Aussie yen has broken these old low closes, and the big support was this 85.45. We're getting a new low daily close in this since looks like June. So definitely, yen strength is kind of showing up everywhere against the pound, against Canadian dollar, the Australian dollar, the New Zealand dollar. It's just broad yen strength against all the currencies. Look at some of the reversal from last week. We've got a mix here of some weekly and daily charts. Here is our dollar Mexican peso, dollar mex as we call it. Outside reversal week lower. Same thing for on the EM side. If we pull up the dollar rand chart, bearish engulfing, outside reversal week lower. So it is a bit confusing if you think of the, if you look at these two weekly charts and you've got the EM is stronger, but the yen is stronger. So it's not really it's definitely not a risk off, and we'll take a look at equities in a minute, but the board is it's more of a dollar weakness story with dollar rand, dollar max lower, outside reversal week lowers, dollar yen, big down day, big down week. Here's our euro yen weekly. Two doji, pretty much dojis in a row. Pretty ugly looking bar here on Friday that closed out the week on Friday. We're still in this range, and we've been touching it several times, both sides. We like this to give way finally. We think that this is, that this is going to break this 131.45.50 area and retrace. We think it's got a lot of room lower. 130 would be the first stop, and then into the 128s, 127s even. Here's a Nasdaq. Nasdaq had kind of a wild week. You can see this was last week's bar here. You can see it's a new all-time high for the Nasdaq. We took it out by the high last week was 63.58.50. And it was 51.50 the week before, so we took it out by 7 handles, and then ended up closing unchanged. It was under some pressure earlier in the week, and then had that big up day on Thursday. So on the weekly, there's some indecision here. It's a pretty good. I'd say it's a pretty good risk reward to be short with a stop above last week's highs. We looked at the dollar Swiss earlier, so this is a big down week. Last week we closed just off the lows of the week. Again, the positioning's very long dollar Swiss. So long dollar Swiss, long dollar yen, and short Kiwi are the largest currency positions from the commitment of traders. So we like to use as an indication of where the pain's going to be. We'll look at the Kiwi chart now. Here's a daily. We finally broke the 68.18, and you can see we closed just below it around 68.15, and we're pretty much unchanged here on the open. This is a big level. There's some bigger patterns at play, bigger head and shoulders type patterns that are pointing to like a 8 to 10% move lower down into 60, 61 area. So we're negative on the year here on the Kiwi dollar. Market is short. Maybe a little bit of pain for the shorts. Maybe we see a little bit of a retracement higher, but we're definitely looking to sell rallies in Kiwi, and we think that it could follow through another 3 to 5% conservatively between now and year end. And that would take something like with our dollar yen view as well. Kiwi yen's got a lot of room. I mean, Kiwi yen can get all the way down here to that's that little low in April, 75. We could see it even back down to like our the Trump election lows, 73. It's only a few hundred points away. So yen cross is definitely the theme this week. The dollar weakness that's presented itself across some of the emerging market pairs and against the yen and the Swiss. That's what we'll be watching out for. And just keep in mind, it is Thanksgiving week in the U.S. I have seen some of the craziest moves ever in currencies, and maybe I'll dig into the charts one of the days this week in a future video, and just show you some of the moves that we've seen that take place, interestingly enough, on Thanksgiving Day, very illiquid. The markets obviously close in the U.S., and that there's kind of a 36-hour period of time between the, the Open and on Thanksgiving, the Asian Open, and the Friday, the weekly close. So we've seen some pretty crazy moves. Liquidity is obviously at a huge premium, and a lot of people are trying to take a long weekend. So stupid things can happen. We've seen it many times. I've seen the dollar get just destroyed, and maybe it's dollar yen's turn this week, and dollar Swiss. It's economic calendar. Not much going on here on Monday, November 20th. We've got German PPI. Draghi is speaking. It's kind of mid-afternoon London. And we got an MPC member, Ramsden, speaks as well. And then the RBA monetary policy minutes. And Assistant Governor Bullock speaks tomorrow in Asia. So not much on the calendar. Looks good. It could be kind of a quiet Monday. Again, the holiday is Thursday. There are a lot of North American traders that actually take the whole week off. Kids are out of school. Take advantage of a little break before before Christmas comes around. And we'll be on. We'll be publishing our videos and follow the blog and look forward to sharing our market views with you for this week. Good luck here on the Open, and keep an eye out for us for the European Open. Thanks.